On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Hello, welcome back. We're on day 2 of the Precious Metals Summit and I'm with Willem Middelkoop, the founder of the Commodity Discovery Fund. Willem, good to be with you again.
Yeah, thanks for the invitation.
Look, we were chatting in March at the PDAC. I think a lot of the big focus around then was geopolitics around gold. Obviously, we were in the midst of a tariff war between Canada and the US.
Started at that time, huh?
Yeah. What are we now? We're about 5-6 months on. Thesis for gold changed much?
In some of the presentations over the last year, I said we're entering this perfect storm for commodities and especially gold. And what we witnessed in the last few days, few weeks, few months confirms that thesis. Look what happened in Poland this week. NATO has been firing that Russian drones for the first time. So the Polish Prime Minister said we're closer to a war in Europe than ever since World War II. Look at the fiscal situation. The Minister of Finance in France has said that France might need IMF help.
I know, yeah.
So the fiscal situation is quite serious. Also in Japan, UK. There's so many problems. You have the debasement of currency, ongoing debasement of currency. I think the inflation might be coming back in a strong way. Central banks are really cornered, stuck between a rock and a hard place. You have an open war between the White House and the Federal Reserve.
Yeah.
Which wasn't the case, let's say, when we spoke in March. And then you have Trump doing quite stupid things, but not out of a position of comfort, but out of a position of weakness. I think the US really has a problem. They need to bring the deficit down. A lot of countries started to stop buying treasuries. So they're playing, the tariffs it's almost like they're panicking.
Yeah.
But by installing all these tariffs, all the enemies of the US are joining forces now. And there are many enemies now, Brazil, India pivoted to Russia. So that's a great case for buying gold.
Yeah, one of the things that you just mentioned there, the open war almost with the Fed.
Yeah.
I wonder, and obviously the impact that we're seeing with the bond market, especially at the sort of 30-year yields and whatnot. Who's ultimately? I'm starting to get the impression that the only person that's going to be buying these 30-year bonds is the Fed themselves. They're going to just have to print more money, and there's just no trust anymore, is there?
And the stable coin. Tether is, I think, the 7th largest buyer of US Treasuries now. So that's why Trump needs the stable coins.
Yeah.
But this also feels like an act of desperation, like some of the tariffs. But it shows the US is in a very weak position. And as you might know, I'm the author of The Big Reset, the War on Gold, the financial endgame. I think this is the financial endgame for the current dollar system.
Yeah.
Doesn't mean the dollar will collapse, but the dollar is down 13% year to date. Actually, that decline started when Trump entered the White House. What was it, January 6th?
Yep.
So the US needs a weaker dollar, which is also supporting gold. Central banks keep fleeing towards gold, buying over 1,000 tons of gold for the central bank reserves. Well, if your business model is printing money and you use that for buying gold, then actually you throw in the towel. You say, this debasement of currency, we can't stop this, and we need to hedge ourselves. So that's the best advertisement for gold for high net worth people if the central banks are starting to flee towards gold.
Well, they've been doing that though for the last 5 years, haven't they, essentially?
Well, the last 3 years we really saw the uptick in demand, reaching levels over 1,000 on a yearly basis from central banks. And that kick-started the gold rally, you could say, because look back, we broke the 2000 level. That's almost two years ago. And I think that was a reaction on the huge demand by central banks. So the high net worth, we have a lot of high net worth, ultra high net worth clients and investors. And even in a small country like the Netherlands, I think high net worth people bought over 1 billion €1 billion of physical gold. And this is such a tiny country.
Yeah.
And we see that worldwide. And I don't see that demand slowing down, although prices are much higher now.
Yeah, I just wonder as well, obviously you've got the weakening of the US dollar, which generally rallies up commodities in general. You've got sort of high inflation with rumours of the Fed cutting rates and whatnot. But I feel like there's more, and I wouldn't mind your opinion on this, is the economic side of things more important than I feel like the geopolitical, where we are in the world right now is almost having just as much, if not more, impact on gold.
It's not about the economy. It's about the monetary situation, the fiscal situation, and the geopolitical situation. And they all influence each other.
Yeah.
And they all are pointing towards more chaos, more uncertainty, and a larger flight to very reliable hard assets like gold, but also Bitcoin. And I'm surprised. I've been calling Bitcoin virtual gold since 2014. I was stupid enough only to buy it myself in 2018. We added it to the fund, Bitcoin, but I'm surprised that if you hear interviews with Druckenmiller, Ray Dalio, you know, the big guys, the smart money guys, they all talk about gold and Bitcoin in one sentence now.
Yeah, it's becoming more popular to do that, yeah.
But I understand why, because I'm talking the same language. And the first one is real physical gold, and the other is the digital form of gold. They're both scarce. So people, the smart money, and now even the central bank money, let's say the sovereign money, they both understand you need to hedge yourself in this ever-growing system of more and more debts and more debasement.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored. With nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton, the upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold: to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
I think one of the things, so for example, if there was confidence in bonds, if for whatever reason investors could become more confident in bonds, then obviously it seems like that market in itself, you're seeing so much outflows now, or less investment it is going into.
Actually, this is the core.
Yeah.
Normally, in the last, let's say, 50, 60, 70 years, when there would be periods of crisis or uncertainty or the smell of war in the air, you would flee towards bonds. But there's hardly any investor who's fleeing towards bonds now.
No.
And that explains, I think, why you see this huge flight towards gold. And the bond market is such a large market. It's a 100 trillion market, the bond market. The sovereign bond market is 50 trillion market. So if a few percent of that money is starting to move towards gold, which is a much smaller market, and even Bitcoin, which is a 2 trillion market, you get these huge moves.
Yeah.
And I think we're only at the start of this flight out of paper money, out of fiat money, flight into strong assets. We were very first in this trade, and we built a fund around this trade. People laughed at us about this trade, but now it's getting more and more mainstream.
Well, yeah, because you're now starting to see even mainstream shows like CNN now talk about gold, which you just would never have seen
No,
before.
but look at the pension funds in Europe or the US. Are they fleeing towards gold and Bitcoin? No, they're not allowed. So all this money, all this institutional money, all this pension fund money still has to start moving towards hard assets. And that's why this is the very first inning of this huge move towards alternative and hard assets. That's our analysis.
But the big reason around this bond side of things, and the reason I ask is because I wonder if it can be fixed in any way.
No.
And I ask that because I get the impression that institutional investors around the world now are looking at, especially the UK, especially France, especially the US, and they're looking further forward. They're looking 30 years down the line. They don't know who's going to be there, what's going to be going on to actually repay this debt. Is there any way that these countries, in your mind, could actually change confidence?
Everybody who has seriously studied monetary history and the current monetary system knows this can't be changed.
Yeah.
So the only way to go forward for central bank and governments is to grow their debts. And once they stop growing their debts, there will be economic chaos and social chaos. So they will keep printing money, but that will jack up inflation, that will increase the debasement of currencies, and more of the smart money and the sovereign money. And the institutional money is starting to understand this and starting to take cover, so to say.
What do you think would happen if the IMF does have to bail out France? If maybe there are even rumours that they might have to bail out the UK.
Yeah.
What do you think the natural response to that would be in the market?
Okay, then there will be an emergency meeting of the board, of the IMF board. And what they will propose is to use the balance sheet of the IMF, which is quite, virgin. It's quite small.
Yeah.
So, like the US used the balance sheet of the Federal Reserve after the Lehman crisis in 2008, the IMF can use its balance sheet to create more SDR, which is IMF money, and then SDRs can be exchanged into other currencies by governments. So that will be their solution, but that means that's another layer of fiat money on top of all this fiat money worldwide. So it will increase the flight towards alternatives like gold and Bitcoin, in my opinion.
Interesting. Okay. In terms of your own inflows, and I think this is a sign of this shift in narrative now, and how mainstream it has become. I mean, you're now up to how much in assets under management?
250 million Canadian dollars.
I mean, that's a pretty sizable amount of money now.
Yeah.
Where was it?
We started with just a few million in 2008. That was just friends and family money. We had 20 investors.
Yeah.
And I was talking the same thesis, that we need to build positions in hard assets, gold, silver, and other commodities, because you get the scarcity. We haven't spoken about the scarcity. Look what's happening with the decoupling now between the US and China, or you could say the West and the BRICS alliance. We want to decouple, but here in the US, there's not enough capacity even to refine copper. So we have to build new mines, we have to build everything. We can't decouple from China, but that's the road they want to go now in the White House and in Brussels. So you get this fight about commodities, you get this fight about critical metals. And in our fund, precious metals is 50% of our investments are related to precious metals, but the other 50% is related to the critical metals. We also have uranium, we also have copper and lithium. So that thesis out of 15 years ago, 17 years ago, when we started the fund, That was a very alternative idea at that time to build a fund around that, but that's getting a broader attention and following now.
Where do you see this going at the moment? Because like we were saying, I think when we spoke at PDAC, you said that geopolitically and in terms of world stability, we've never been in a position like this since World War II. Obviously, it doesn't feel like we've improved on that situation at all since.
No, it's getting worse every week. It's getting worse every month. And it's not only the threat of war, it's not only the threat of economic instability due to the decoupling, it's not only about the debasement of currency, it's the whole mix. And don't forget, we haven't even spoken about the leadership in the US. Well, we touched upon the fight with the Fed, but if you look at the leadership, what's happening now in the US, that reminds people who know a bit about history about the end of the Roman Empire, where you get strange and weak leaders who do stupid stuff, and pushing India in the arms of Russia and China. That's such a stupid geopolitical decision, and that's what Trump has done, because he wanted to punish them because they took the Russian oil. But and we can only begin to understand what the consequences of these huge changes will be, and the consequences will be felt for years and maybe decades to come. Yeah. Because this is the end of the US empire as we have known it since the late 1940s. Yeah,
even on India, I've been to India quite a few times. I spent a few months there. India, it's 1.3 billion population. India have a mindset, generally speaking, of we need to do what's best for our own people. We've got a lot of people to.
But they're angry with the US now.
But of course, but if they need oil, they need different minerals. They are going to get it at the cheapest rate for their people. Sure. And Trump punishing them for that is when he hasn't done the same punishments on even say China, who'd taken the oil. I think
and the Saudis take the oil as well.
Yeah. So I can see why India are probably not overly happy, and you're right. It does then just start blending into this bipolar world, doesn't it?
Yeah. Oh yeah. But we had this peace dividend after the collapse of communism in the late 1980s. So this peace dividend helped all of us, I think, all economies worldwide in the 1990s and the early 2000s. And now we have the opposite of peace dividends. I think, we're getting punished now, all of us. We need to pay higher prices for a lot of stuff because of this.
Yeah. Look, I think it doesn't really, in my view, it looks like this is a continuing trend that's essentially, especially in relation to the gold price.
Yeah.
This doesn't look like this is short-lived now, does it?
No. We're just starting. We've been waiting and preparing for this for the last 15 years. We have a strategy that we build huge positions in reserves, gold, silver, copper, uranium reserves, still which are still underground. We see companies and countries starting to fight for these last reserves because they need to build mines. As I said, the West wants to build its own mines. For the first 15 years that I've been in this business, we were never contacted by the State Department or other officials, and now every quarter we're invited for a Zoom call, and we were just invited to go on official mission to Saudi Arabia. So the Western governments decided to start to decouple from China and to build their own commodity structures. And I think it's too little too late, but it helps us because we see the valuation of these ounces in the ground are increasing, and the awareness for the general market and general investors for the world of commodities is increasing. And I just saw the results of a survey among family offices, the ultra high net worth. On average, they have less than 1% of their assets in commodities.
No. Yeah.
So there's room to grow.
I'd imagine that will be growing quite a bit over the next few years.
Yeah. And that helps to grow our fund. And now we have almost 2,000 individual investors. And I think the fun is just starting. We had a very long bear market actually. The top of the last commodity cycle was in 2008, as you might know. So the bear market has ended. The bottom has been tested a few times. 2016, the first bottom, 2020, and then 2024. And now we see the start of a very strong and healthy bull market. And I'm 63 now. I hope to enjoy it for the next 1 or 2 decades.
Yeah, no, agreed. This time next year, where do you think we are? Gold, silver price? Can you give us any predictions?
Well, everybody is waiting for the correction now because everybody is thinking this run has gone too far and gone too fast. We could get a technical correction, but I think all dips will be bought, so the corrections won't take longer than maybe a few weeks or maximum a few months. I would be very surprised when we would see gold south of $3,000 again. And I think when a technical correction is over, you'll see a very quick run towards $4,000 or $5,000. And before this whole cycle is over, gold will probably be north of $10,000. And silver is just starting to react. Silver still has to make new all-time highs. So you see a spillover. Copper is on the verge of a breakout. Uranium is looking very strong.
Yeah, no,
so it's the whole commodity space.
Yeah, I'm actually quite surprised silver's taken so long lagging behind, to be honest. You've had this structural deficit in the market. We've had all this inflation after COVID and obviously all the war premiums and whatnot.
But it's a market which is easier to control by selling futures. And I think now they're starting to lose control over this market. So the usual suspects on Wall Street who kept gold and silver prices down for years. There's some evidence that the price discovery mechanism is changing from the west to the east because the larger moves in the gold market have been during the Asian trading hours compared to, and this has changed from March. Before March this year, the price, the major moves of the gold price were during the American trading hours. So that's a major change.
Interesting.
Yeah.
What are you thinking what's the mood with the mining company? How happy are you with the performance of the junior side? Because you invest in Discovery, right? You're looking at
we're very early stage stuff.
Early stage, but you're really looking at the best exploration results in the industry and whatnot. Without even pushing you for names, but if you want to say some names, I mean, I'd be more than happy to take some.
We used the last 15 years to really study the world where the last major discoveries and major metal deposits could be found and which could be still developed into new mines. I think that has greatly helped us to understand where the value can be found. We pivoted our strategy a bit, not trying to predict where the new discovery will happen, but follow the big discovery. So we invest in the scale-ups, not in the startups. That's a big difference. And that saves us spending time on thousands of junior mining companies all trying to get our attention and asking for our money. So we only do the major ones now, the major discoveries, the tier 1, tier 2 discoveries, the world-class discoveries. And unfortunately, the recovery of these smaller mines, they lacked the recovery of the gold price by at least 12 to 18 months. Because first we saw the recovery of the gold price, then we saw recovery of the senior producers. And now we have seen a recovery of the junior mining names, and that only started actually in April, May. So the technical breakout of, let's say, the Toronto Stock Exchange Venture Index, that happened late April. So we're just a few months into this recovery, and that's why we think this will have quite some legs.
Nice. Okay, Willem, thank you for your time.
Pleasure.